Now we're live. It's so funny sometimes, it's hard to tell when you actually live.
Oh
So
yeah, now I see it live.
yeah, it's live. Hey, good afternoon. Welcome to Think Beyond the Keys. I'm Melvina Fredson-Cole, your realtor and loan officer. And if you've been listening to me, you've been known I've been speaking the past few weeks about the ground up in home ownership. That's getting your credit and everything in order because that affects whether or not the lenders will lend. So I am excited to bring to you the Senior Vice President of Credit Services at Get Credit Healthy, and Katya Zevallos. Right, Katya?
Yes, correct. Hi, everyone.
Hi. So thank you for coming on. And just so everyone would know, she's on East Coast time. So I appreciate you taking time out of your normal schedule to be on here and to speak about something I know that you're passionate about. And when I looked at Credit Healthy, I understood that like their values lined up with mine, which is not just helping the consumer get their credit score, but educating them and empowering them. And that's important in making sure that they it's a lifelong thing, right? Not
Correct. It's not. We really strive to find permanent solutions for our clients. We're not looking to just fix someone's credit report. We want to make sure that we establish behavioral changes within a consumer, and we do this really by focusing on education with our clients because that's key. We want our clients to be able to get credit healthy and sustain that great credit score that they've obtained while being in the program.
absolutely. Now, and I know it's no brainer. I mean, you're in America, we're in the US. We know that credit score is extremely important, not only for home ownership, but for a lot of other things. If you're going to rent a home, if you're, going to get a car, if you're going, I mean, it's vital. Yet I was alarmed when I read one of your articles, actually, that more than one third of Americans have a credit score below 620. And even more alarming that 45 million adults are either unscorable or who do not even have a credit score. And that is alarming, actually, to know that all these people are out there and they cannot partake of wealth building. And, and that's what they pass on to the next generation. And so that's the importance of this. One thing I want to ask you, what are the key factors that affect borrowing credit? Some of the key factors.
So when we're looking at a FICO score, there's five main factors. The biggest factor is payment history. That is key to credit. A lot of people think if I don't have credit cards or if I don't have any debt, I'm actually in good standing. Yes, while it can be true, however, it's really important to make sure that we are able to provide credit bureaus with information in regards to our payment history, because that is 35% of our score is based on just the history of our payment. One late payment, even though it may seem insignificant, it can really hurt the score. New late payment can drop the scores anywhere from 50 to 70 points. So it's crucial to make sure that we are making all of our payments on time.
Mhm. Now I'm gonna just put a scenario here and just assume I'm a client, right?
Mm-hmm.
And I go to get a loan and they tell me, okay, no, your credit score is really too low. We don't have any programs for you because it depends on the program. There are no programs. And so I look at my credit, they pull it up and I'm like, okay, I'm going to take this into my own hands and increase my credit score. So I'm going to go and pay off all everything that's in there, stop using my credit card. And then after a year, I'll come back and it's going to be fine. What is wrong with that scenario?
Couple of different things. So there's a lot of information right now, and we live in, it's 2020, the age of technology, and there's a lot of misleading information online. We want to make sure that we are educated as far as what constitutes good activity for your credit. As far as paying off old debt, you definitely don't want to do that unless you're doing some kind of negotiation where they're going to delete it off of the report. Reason being that paying a derogatory account will actually re-age the account. So let's say you have a medical collection on your credit report that's 2 years old. If you were to go ahead and make a payment on it, for the eyes of credit, it looks like you've just paid something 2 years late. And we remember, what is the biggest factor in credit? It's payment history. As far as credit cards, you always want to make sure that you're not closing any credit cards down, because that's also hurtful towards your credit score.
Okay, cool. So you spoke about one of the things is like payment history, 30% of the scores. What about the other percent? What else comes in that mix?
Sure. So 30% of our score is based on the utilization rate of our credit cards. So this is why it's so important to make sure that we keep our balances low, keep our credit cards open, don't close credit cards. But mainly, the most important thing is just keep your balances as low as possible. The higher the credit limit, the higher the credit balances that you have, the lower the credit scores are going to be.
Okay. And I'm not sure, because I spoke about this a few weeks ago, and I was normally like, is there a percentage to keep it under? Because
Rule of thumb is 30%. Yeah, it's about a third.
Okay. And another thing I'd like for you to clarify, because there's a lot of people who said, oh, I know my credit score, it's this. And then when they come to lenders and we run it, it's different. And most of the time it's lower than what they expect, and they're very disappointed. So they call them assimilated. I mean, what?
Correct. So there's something called simulated or educational scores. These are the Credit Sesames, Credit Karmas of the world. Our credit cards now do provide us with credit scores as well. It's key to make sure that whenever we're looking at our credit score, we're looking at what scoring model are they providing to me. The reason why this is important is because, just like you said, I can think I am in 750, I go to a lender and they are telling me I'm actually at a 650.
Mm-hmm.
So it's very misleading information. If you look at your credit score, where you're pulling it from, they will always disclose the scoring model that's being used. It's very important. It's usually in very small print, but you want to take a look at it and make sure what you're looking at is what a lender is going to look at.
Yeah.
A lot of times they will disclose lending decisions are not based on this scoring model. So it's just important to make sure that we educate ourselves when we're looking at our credit scores.
And I know that I'm not sure if this is correct, because just like you said, there's so many misleading information online. But I read that 90%, up to 90% of top U.S. lenders use FICO scores. Is that
correct?
Kind of, yeah.
Correct. Yes. But we want to be very careful with that, because within FICO, there's many different versions of FICO.
Oh, wow.
Lending decisions are based on version 2, 4, or 5, depending on the credit bureau. So we want to be very careful of that. I know that a lot of the credit cards and the banks are providing their clients with FICO scores. However, they are FICO 8, FICO 9, which banks don't use.
Wow, I did not know that. I learned something.
Yeah, so even though you're getting a FICO score, we want to make sure that we're getting the right version of FICO.
Oh, okay, that's good to know. So there are different versions, 2, 4, 5, and then each lender use different versions, but
each credit bureau uses different versions.
Oh, each credit bureau uses different. That's something really good to know. And also, I would like to come back to something that I'm really excited about your program, the program at Get Credit Healthy, because you guys are deliberate. For example, I know that about 39% of people who are declined for mortgage, around that percentage, normally a decline because of credit profile. And those 39%, what happens is when we send them to you, one of the things is people go to buy a loan and they said, sorry, and then they're left to the sea to swim, sink or swim. But I love the fact that we can take these people and say, hey, can you help them? And then they help you, right? You help them get to a specific credit score.
Correct. We're very goal driven. That's what the basis of our program is. Our goal is to get our consumers to their goal as quickly as possible, whether it's helping them with the rebuilding. You mentioned before how people aren't even scorable and they don't know why they can't get approved for a home loan or a car loan. We do help them with the rebuilding process if needed. We help them with challenging the derogatory information. Also education.
Yeah.
That is really key to our program.
Cool.
So it's a mixture of everything.
It's a mixture of everything.
Mm-hmm.
And also because there are a lot of, well, how can people kind of know which credit company to use? Because I've heard like a lot of horror stories. It's like, oh yes, we're paying for this or whatever. It's very confusing out there. So what are some of the key things that they should look for in order to make sure they chose the right one? Obviously, you guys are doing great, but there are a lot of people out there who are already in the programs. How will they know they're in the right one?
You know, I think the main thing, one of the things, feedback that I get from clients coming from other programs is that they don't know what's going on. They have no idea what's being done. And we do focus a lot on communication because we want to make sure that our client feels like they're our partners. It's not us working, we are working for the client together. So that's key. We do communicate with our clients monthly, and we want to make sure that we're very transparent in everything that we do. Another key factor is, how do we measure success? Other companies can focus on deletions. Well, we deleted 5 accounts, wonderful, but what does that do? What does that mean for the client's score? Client doesn't know that. We do provide clients with the mortgage FICO scores so that they are aware where their score stands month to month.
No, that's kind of cool. I think there was another thing here that I just drew a blank. I had a question that when you were talking came to my mind, but then now I just drew a blank. But bottom line is credit score is important, and because of the large number of people that are affected and are being turned down, and especially a market like this for them to take advantage of, and they're not being able to do it. One of the things that came to mind is that you can ask your credit company which FICO scoring are they using also, because if so that your FICO score mainly, if you are building it, it's dependent on what you want to build it for. Is that right?
Correct. So like we mentioned, there is different versions of FICO within the FICO scoring model. So for example, if you want to purchase a vehicle, dealerships look at FICO auto scores. So it's very different than what a mortgage lender would look at. Why? Because the FICO auto scoring model takes repossessions, late payments with auto accounts into consideration a little bit more.
Okay.
Let's say a consumer FICO score that lenders use.
Okay, cool. And so what is the, do you have like any tips for people, like what you've seen people coming through the program? Anything that, you know, because the consumer also have their own part to play. You can do all the deleting or understanding. What is the consumer's part? Because we're educating them, what is their part to play?
So we ask for basic things. Make sure that you're continuing to pay everything on time. Don't pay anything late. Late payments, again, are the biggest factor in the credit score, can drop the scores significantly. Keep your credit card balances low. Try if you can pay a little bit more than what you're paying now, so that we see the best score possible for the consumer, because credit is a mixture of working with the negative and then working with the positive information that's on there as well. Another thing, don't have your credit pulled unless it's completely necessary. Anytime you have a new inquiry on the report, it drops the scores anywhere from 3 to 8 points. Although it may not seem like a lot, but if you continue to do that, it can have a significant impact on your credit score.
When you talk about pull the credit, something came to mind. I remember a few years ago, I checked mine And I noticed that there was this bank that seemed to be checking my credit like every 2 weeks, and I never applied for anything. I never went to them. Those also affect our credit scores, but how?
If it is,
Mhm.
yes, if it is a hard pull, there's two types of inquiries. There's what's called a hard pull or a soft pull. Soft pulls is where you're not looking for a line of credit necessarily, where they're just looking to see how the credit is. It does not affect your score. A hard pull is where the consumer is looking for an extension of credit, and your credit score and credit report is pulled to see where you stand. So
Oh,
those are the ones that actually do impact your credit score.
good. Because I was concerned, and I'm like, I need to freeze my account so people won't be going in, because I'm like, I didn't give them permission to be checking. So they can check without your permission. That is.
They don't have permissible purpose, meaning that you're not looking for a line of credit. So creditors sometimes will do soft pulls on you. How do we, as consumers, when our credit scores increase, we start to get pre-approval letters for credit cards. That is because they've noticed a positive shift in our credit score. So they're not necessarily pulling credit scores, but they're noticing that there's a trend of your score going up. That's why as consumers do start to receive those letters in the mail from time to time. But it's really important to make sure that we are educated as far as what's on our credit report. It's really important to make sure that even though you may not be looking to do anything with your credit, pull your credit report periodically so that you do know what is going on with the credit.
That's important. How often should we be pulling it?
You know, their annualcreditreport.com does provide all consumers a free credit pull. It's not a score, it's just a report. You are entitled to that once every 12 months. However, now with COVID, they are actually providing free pulls weekly.
Oh, really?
Yeah, so you can go every week and pull your credit report. Again, it's no score, but it does give you the information that's on the report. You can pull it from all three bureaus.
Is there a way to actually get a credit score? For example, if I'm planning to buy a home or a car next year, how can I go and pull the right score so I know where I am and plan to where I want to be?
You can always go to My FICO if you are looking to pull yourself without having a lender involved. You can always go to My FICO directly, pull it there. It is going to cost you, it's $20 per bureau. However, there's no inquiry on the credit report.
Okay, so that will not reflect that. Yeah, it was.
No, because you yourself cannot extend a line of credit to yourself. It
Oh,
only hurts your credit if you're looking for a line of credit.
yeah. So one quick thing, I know maybe I'm just to clarify, right? If I go to My FICO directly, what kind of FICO score will I get? Is it just a generic one? Is it specifically like a 245? Is it an 8? Is it a 7? When I get
They will
that.
give you various, actually. They will give you
Oh,
various FICO scores. When you do get it and you're looking to see what score should I be focusing on, it will provide you verbiage on the score, and it will tell you this particular scoring model is what's used for lending decisions. So it'll guide you as far as where you need to look at.
okay. So great, that's great information. One of the things that you said, like FICO uses, they use also new credit accounts. So what is the length of time do they, is it if I open an account that's only like a month or two old, does that hurt my credit?
It's not hurting your credit, but it's not helping your credit necessarily. The length of history is one of the key factors in the FICO scoring model. So the longer you have an account open, the more of an impact it has on your credit score. Remember that the longer it is, the longer you've had it open, the more payments you have accumulated with that specific account. And again, payments is what's really driving your score. So newer accounts, while it's great to have new positive information on the credit report, the billing information is not going to help you too much, not just yet.
So so for those people who says, oh, no, I don't like to keep balances on my card. I just keep this for emergency and maybe don't use their card for a year. That is not helping them because there's no utilization for, lenders to track that this.
Right. If you don't use the card, there's no need for a payment. So then there's no payment on there. Also, we want to be careful that sometimes when we don't use our credit cards, the bank can go ahead and just close the account. And again, you never want to have a credit card closed. So it's good to just use it every couple of months, because on one's credit report, closed is closed. It doesn't matter if we initiated the closing or the bank initiated the closing.
Wow, I did not know that. Wow, that is great to know. Well, is there anything else that you would like to leave with viewers viewing this, tips, or or they know how to contact you right there, but is there anything that you can leave with them?
I think really what I've been doing this for 10 years, and the main thing that I tell consumers is be educated as far as what you're doing, what you want to do, what your goal is. Be realistic. Don't be misled by someone telling you. Remember, you have to have your own best interest at heart. So that's why it's important to just make sure that you educate yourself, whether you want to refinance your home, purchase a car, even if it's just rentals, right? Just know what it is that you want to do and be realistic as far as how you're going to obtain that.
Okay, thank you so much. And
my pleasure.
Yeah, and they can reach you at the number right there on the description.
Yeah, you can give us a call. We'd be more than happy to assist you if you have any questions.
And one cool thing I like before we leave is the program has a coach that will coach you and guide you, and you also have a portal you can log into. So it's really,
Correct. So we talked about transparency before. You will know if part of the program is that you are, yes, paired up with a FICO and FCRA credit coach. This is a person that's going to guide you and really hold your hand throughout the whole program. And then also the portal, we want our clients to be involved in what it is that we're doing, so that we have that sense of partnership and we're able to reach our clients' goals.
Great. Well, thank you so much for your time. Thank you for taking time off.
My pleasure.
Today, we appreciate it. I may have to call you to come back to speak on different things on credit, because this is a really foundational when it comes to your financial health and financial building. And it's something that I believe that everyone should have a coach, at least to get them off the ground, to see where they are, what they can do, and periodically have that review, just like you.
Absolutely.
Yeah.
Absolutely.
So cool. Thank you so much.
Okay, my pleasure.
Appreciate you. And if you can just hold on, and then we can just. So thank you everyone for watching. Oh, next week, please tune in. We have a special on VA loans. You don't want to miss that. If you have anyone in the Army, in Veterans Affairs, just let them listen, because it's really important, and there's a lot that they can learn and a lot that they can take advantage of. So see you next week on Think Beyond the Keys. Take care.